Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, August 14, 2014. You're looking at a daily chart of the SPY, and it seems to be that we're in that predictable mode in the market. Ever since we hit these lows, which I told you where the low is going to be, then we started up, and I said we would probably trade into this pivot high or gap window right here. And that's exactly where we went today. After hours, we went a little bit higher, but I think we came up by the close today. I think we came up about 2 cents short, and then we popped over it after hours today. So we've achieved this level. So what I think is going to happen from here is I think at least tomorrow you expect a little bit of a pullback. I don't think much, but a little bit of a pullback. I think this is a good move. I think it's ready for a pause, but I do think the market still goes higher. I think you can certainly get into this area, and if you get into this area, depending on how you get there, you may just test the highs and maybe punch through it a little bit. If you test the highs, you go up to S&P 2000, you go up to NASDAQ 4500, and then that will kind of complete the cycle, if you will, and then we should start back down. But if that does happen, it's going to be probably within the next 2 weeks. So between now and the end of August, you have basically very light volume, as I discussed before. You have the Labor Day holiday weekend. I think Labor Day falls on September 1st. And that being the case, between now and then with the light volume, unless you have something really shake the markets up, you could get all the way up to the high and then some by that time, if that's going to happen. So we'll see. We'll know more as we head there. But tomorrow, I think we're going to expect a little bit of a pullback. Been right so far, so I'm going to stay with the concept of the A, B, C. So I think this completes A in my mind, and we're going to look for a little bit of a shallow C. Maybe we even get some sideways, a little bit down tomorrow, and then maybe some float around sideways action into next week, and then maybe we pop the markets up the following week, and then after Labor Day, maybe they dump it out again. We'll see. We'll know more as we get closer, but that's kind of the working theory I have right now. So that's about it for the market. Let's take a look at the 60-minute chart, the hourly chart, just to see where we are. See here, we came into this high, okay, and then your next target is going to be this gap fill here. Almost just call it 197. It's close enough for government work. And you also came into this 200-period moving average on the hourly chart. Just made all the sense in the world. Kind of looked like it was going to happen all day long, and of course it did. See, what you have here is you have a somewhat in between a U and a V. So you have this down move, and then you have a reversal, and that's your A, and then you should probably get a B and a C. So we'll see, but that's no telling exactly what's going to happen tomorrow. I just feel that it's due for a pullback, so tomorrow's as good a day as any for a pullback. Let's go over to the gold chart. Gold did nothing again today. That's the 60-minute. Let me flip over to the daily. Gold did nothing again today. It's still chopping around. So again, time and price, just not ready yet. I still think you can come down a little farther before we're ready to buy gold. I'll let the members know when the time and price is right. But right now, nothing new in gold. Gold miners pulled back a little bit today. They were down about 27 cents, but there's nothing wrong here either. As long as you stay above that inverse head and shoulders neckline that comes down here, this is a healthy market. This is a bullish pattern. So we're going to remain bullish in this market until further notice, but I'm thinking that we still have one more downdraft before I'm ready to buy, and that's the way I'm playing that. Let's see. What else do we want to talk about tonight? How about oil? You betcha. So check this out. So I have been saying that this was a sick chart, right? How many times did I say that? Sick. I said this was a sick chart. It wasn't in my mind and my analysis and my work, it wasn't ready for a short. It would have been a short if it played out longer than this, but it just didn't. So it broke down today, so we weren't on the short side. However, you know how I like to go over to the weekly chart on oil, on USO. And, You came, where did you come? How many times did I tell you this pivot low at $35, okay? Actually, this pivot low is $34.97. What's the low today? $35.04. Pretty darn close, okay? But it's not ready for a buy. And I'm going to issue a trade alert to my members depending on what happens over the next day or so. So I'm not going to give you the price level in this video, but I can tell you that oil was sick and it broke down, and that was, pardon me, that was predictable, folks. Just didn't know when it was going to happen, but it was, I told you at least 3 or 4 times it was sick. And it broke down, and I said not to be long oil, and that turned out to be a good call. So there is a long play coming in oil. However, I'm going to reserve the price levels for the members. It's only fair to them, and we're going to stay with that. You know, I want to flip over to interest rates tonight. I know I haven't talked about interest rates in several sessions, but as you can see, interest rates are once again pushing lower. And you know, keep in mind, folks, the bond market is way more intuitive, and it's much smarter than the stock market is. And that is to say that the bond market, or the participants in the bond market, usually sniff out things long before they happen, and the people in the stock market and the stock market itself always seems to become surprised. So what you have here is you had an attempt to rally the interest rates, and then you had a failure and you broke down. And now you're making lower lows again. Okay, you haven't broken the low yet, but you're pretty darn close. So what this tells me, if I'm just an observer looking at the interest rate market, it tells me that the bond market, since the bond market, the prices of bonds act inverse to the interest rates, so the prices of bonds are high. Here, let's take a look. This is a TLT chart, which mirror images the 20 to 30-year bonds. Okay, high. Okay, interest rates low. This is the 10-year TNX, the interest rate. What that tells me is there's more trouble out there. Okay, interest rates don't go down, especially when the Fed is in the middle of tapering their stimulus program. Interest rates shouldn't be going down unless there was a tell, unless there was a problem in the markets. There's a problem in the markets. These are the things that factor into the common sense analysis part of it, right? You don't have to be a genius to see if bond prices are rallying, which means money's flooding into the bond market, driving interest rates low, while the Fed is tapering their stimulus program. That's not good news, folks. It's you don't have to be a rocket scientist to see there's problems out there. It just becomes a matter of when do the problems really surface. And what it looks like to me right now is it looks like the problems are going to start to surface after Labor Day. That's just an educated guess. I don't know that for a fact. It's just an educated guess. And for now, we're going to go with that thesis, and we're going to watch how the market behaves on a day-to-day basis. And if we change our mind, it will be because the market told us to change our mind. And that being the case, folks, I think I'm going to cut it a little bit short tonight. I'm going to give it a wrap. It was a very quiet day in the market, light volume, float higher, grind higher, somewhat of a melt up. I showed you the interest rates. I show you where there's problem. Oil, we had a good call on oil. Don't be long. It's just not ready for a buy yet. Nothing going on in gold. So that's about it for tonight. That's a wrap. I'm David Frost. Common Sense Market Analysis. Thanks for tuning in, folks.